with it. So it's June 30th. This is our second backtesting session for the month, I believe, right? So we're gonna hit random bar. I don't know how far this goes back. I don't know. Where we're gonna end up. If it's a bank holiday, if it's whatever it is, we'll just skip forward. Based on what we're given. But here we go. Make sure I'm recording. Cool, great. Throw some music in my ears as well. And please stop being weird and putting ICT in the chat. I already hear him laughing in my head because I mentioned time. But it's, again, not his kill zone and not his macaronis either. So let's move forward with this session. Hold on, where's my... there we go. Cool. So I think the first thing I have to do is move it forward once. Okay, we're right here. Cool. So this is Sunday, March 17th. You hear that? March 17th, 2024. I don't know anything about this. I don't know what was going on around this time. All we have is this one candle, right? Right? This one candle. We have nothing else. No other data but this one candle. So, I don't know if you guys trade Asia and want to move forward with utilizing Asia. Obviously, this is the 5 minutes, so it's going to get across the sessions a lot faster than the 1 minute. What we're back testing is just price alone. We don't really care about the time frame that it's on. It's just going to back test what we essentially see in price and how we respond moving forward with an entry. And we could also note, right? So I'm going to be fair with this because some people don't trade based on the 5 minute time frame. What we can also note is if we get to a 5 minute POI and we get to some sort of 1 minute down candle closure or 1 minute, shifting in price that happens within that POI, then we could say, yes, this POI we will use, if we have that, 1 minute, turnaround, that 1 minute reversal or whatever it is. So it doesn't limit you into having to spot the reversal on the 5 minute time frame, because you're not always going to spot the reversal that happens on the 1 minute. It's not going to look the same on the 5 minute time frame. It'll do the same thing, break a high, break a low, things like that, but it's not going to look exactly the same way. Somebody said trade in Asia is a little slower to follow rules. So with this, what I like about the 5 minute at least is that when you're back testing on the 5 minute, it gets you through Asia pretty quickly. So let's take our 4 hour candles, right? There's 22. There's 2 a.m. right here. So guys, here's why I started using the 4 hour candles, because I know somebody else is going to ask me that. You don't use 144 anymore? Yes, I do. It's just for different purposes. But here's why I use 4 hour candles. Here's what I noticed. And, I'm not claiming that it's an enigma or anything like that. But look at this real quick. So let's go over here at 1800, right? So this is Sunday, right? This is Monday, market close on Monday, right? Look at the times. This is 6 p.m., right? Eastern Standard Time. 10 p.m., 2 p.m., 6 p.m., 10 p.m., 2 p.m., 6 p.m., 10 p.m., 2 p.m., 6 p.m., 10. You guys see what I'm saying? 6 p.m., 10 p.m., 2 p.m., 6 p.m., 10 p.m., 2 p.m., 6 p.m., 10 p.m., 2 p.m. So with whatever momentum that we are trading in on the lower time frames, we need to understand that our little scalp and hold with no stop loss and all of that other stuff, it should not be, because this is for the DJing crowd, right? It should not be near 4-hour highs and lows, right? After price runs a 4-hour low, that should not be where you're shorting in that direction, and then it goes to the other side. And now you see us head back into a 4-hour reversal, going back up to a 4-hour POI after a 4-hour low is ran, but you did not know where you were at the time, right? So I place this here now because you need to understand that when you go up, when you do these, remember the sweeps that I talk about, right? The higher time frame sweeps. Those higher time frame sweeps are higher time frame candles that are being swept in order for me to trust the move to trade back into the range, right? So you can't be longing at a higher time frame 4-hour sweep of a high, right? Unless that 10 o'clock momentum is to move it further in that 4-hour direction, the daily direction. Unless that 10 o'clock candle is willing to move it in that direction, which at times it is not, right? 9 o'clock usually runs into some low, and 10 o'clock heads to the other direction over there. And then you could have price move back into 10 o'clock, right? That's why we always see that retracement at 10, which we're going to go over. And then heads for another 4-hour POI, right? That's either a 4-hour low or a 4-hour imbalance that's up above or below, wherever it's at. So you need to be aware of where these 4-hour sweeps are, so you're not trading on your 5-second time frame against a 4-hour, unload of liquidity or something, So very important that you guys mark this out yourself. The indicator that I'm having created, it's also going to have the option of marking out the 4-hour opens, right? So the reason we don't really care about the 6 p.m. open, right? What we care about is if 6 o'clock goes like this, and then it goes like this, and then it goes like that, right? And then it goes here, and then here you go at 2 o'clock. 2 o'clock puts in a high there and goes down to 6 o'clock, right? We don't care about the open of price. Oh, this opened at this is 6 p.m. open price, so we want to see if an imbalance is left near 6 p.m. open price. That's not what we care about. What we care about is where that 6 p.m. low is, right? Because we know that in the event that we strike through this low here, right, that 6 p.m. low, that could explain the justification for why there's now a sharp move up and there's imbalances that are now being created on the way up, and it's running to something. That could explain to us what that kind of momentum is coming from. It's coming from the low, that 6 p.m., that higher time frame 4-hour candle sweep, and then it's trading back into what? It's trading back into a 4-hour up move or a 4-hour zone that it created up above. And we would be seeing all of this on the lower time frames as we're paying attention to where our 4-hour candles are. So that's the only reason why I'm placing these on the chart. Just so you know when you're trading with or against a higher time frame sweep. right, let me see. So we have shift here. There's down. There's right. Okay. All right. So I don't imagine anyone, um, anyone's taking any entries around this time. If you guys do take entries around, 6:30, you could, say so. But I don't imagine you guys do. I just know that when we have this here and we get that little rounding like that there, that first one we often trade through. They can see a move back there, move back there, move back there. Something up here that now this 4 hour runs us back towards here. Right? So whenever it is that I'm observing price in Asia, that first rounding that occurs usually, sometimes in Asia and sometimes even around London, that rounding that happens around London, sometimes London trades higher than it and then runs below that rounding that happens there. So that's something that I just noticed when Asia initially opens up, and then you could see, price trade higher from Asia and then come back near, Asia. So it all really depends on whether we trade up above or whether we open and we go below it. So let's move some of this out. Let's just keep that low on the chart. Remember what we said. We want to keep the 4 hour low on our chart. Let me just move some of this here. Because even though we didn't push up above this high, that doesn't mean that the other things, that occurs won't be valid. Because it'll still be valid because it's based on what the time usually does. So great, we rolled downward. So look at that, no low. It doesn't take out the 6 p.m. low. So it leaves that low there, right? So that's something that, again, I said later on we want to pay attention to, because we know that when this sweep occurs, we're in line with a higher time frame 4 hour sweep. So there we are, trading up above this the rounding up there. Let's see. I guess this is a reasonable time to start looking at price a little closer. So I'm gonna put this in the chat and you guys can mark this up. All right, there you go. And tell me what your expectations are. So just know that the 4 hour opened here and traded to this low, right? So anything above, let me just make this a different color. Anything above this open, anything above this open is a body for the 4 hour candle. Anything below this open is just a 4-hour wick, right? So I'm saying that because likewise we talked about this 4-hour run of that low, right? But when we have this wick here, there are those times where people are anticipating the draw on Asia's low, and we go near it and then trade away from it. A lot of the times it's because of the wick that's there. We tap into that wick and trade away from the low. So it's important to know where your higher time frame 4-hour wicks are in case we get that 4-hour move back up into the other direction before actually taking the 4-hour low. So you want to look at what time that's occurring around, and that would usually be occurring around some new 4-hour candle open. It would be another 4-hour candle that's doing that. So that's why we want to stay near the understanding of where our 4 hours will be. Don't make fun of me using time, because I could feel you guys. Alright, so nice. We made it to our 4-hour candle closure. And what does it look like? Here, right? So this is the body of the previous 4-hour candle, right? And this is the open of the next 4-hour candle where it put in a wick at the high, right? Putting a wick there, opened, and left this body, this 4-hour body below, and this 4-hour wick down below. So let me just take this because that's our zone this there. And let's take this. Where are we? So let me see. Here. Drop down below. So I see some people wanted to trade into these lows here, while others are thinking to move off of that high. Right there. That seems to be where everybody's at. So nobody's thinking this can be down here, run that low, and then go back in. Alright, let's see. Okay, so where are we on this? Seems like everybody, whether they were planning here or even down here, is trading away from everybody. Where are we on this? What do you guys usually do with entries like this? And I ask that because many people who are expecting price to go here or here or here, or here, or wherever it is, there's a lot of people who believe because they have a setup waiting here, they should take a short to go there so they can take the long to trade out of there. And that is one of the most destructive ways for people to trade, because when you have those days where price is trading away from that and it gets them back into something here, right? And it extends higher like that, right? Guess where they were short? In there, trying to get back to their POI there. To go long from there, to go all the way there, right? And guess what's going there with them? Not their profit. Is their drawdown being taken there? Then they see that one sharp move after the margin call and they bust. To go there. There's no money to even get involved in that move. Oh, but if I held, I would have got out at break even, but it margin called you already. So don't be that person. Let's get back to what I get digress sometimes. Apologize. Let's get back to this. So our 4-hour candles over here. Boy, does that look like what was just explained on get margin call in Asia? Because you're trying to short this down into the POI here, and it carries you 11 points to the other side. So remember what I said. This is still valid. This whole this thing that was drawn up here, right? Because it's basically tracking what these 4-hour candles are doing, right? So now you know there's a 4-hour low here, right? Right there, right? There's the one that opened up in Asia and traded this way. So now you know there's a 4-hour low here, and you know there's a 4-hour low here. Right there, right? So this is London now, and in the event that London starts to dump, it could look for one of these 4-hour lows and get into here before moving back up again, right? Moving back up out of this POI, but out of this POI below here, right? But if we end up down here, right, with like some consolidating here within New York, you could end up seeing us hit. That's when we hit Asia, and then we run back up to London, right, like that. So this is just helping us to be to sort of trade in the direction of that 4-hour momentum, right? So it looks like we opened here, so there's a little 4-hour wick right here. It's just in case we get there and stop. So what would have been great about this was to know if this came from down below here or if this came from up here. And why that would be great is to know where this low lies, right? But we don't have that, so let's just stick to what we have over here. Now we see this. I guess London Open is around the 3, right? So we have a 4-hour low here and we have a 4-hour low here. If we're looking to trade in the direction of a higher time frame sweep, we want to wait for these sweeps to occur at least to be able to partake in that. Otherwise, let's say we go here and we put in another high here like this, right? And then we get back here for New York. A lot of the times New York would go here, and that 10 a.m. that 6 to 10, this is New York going there for market open to go there, and then that 10 a.m. candle taking out New York and then heading down into a 4 a.m. A 4-hour low. So none of that exists right now. Let me just move that away. None of that exists. It's just saying that these are the kind of things that people get caught up in that market open momentum. They don't know where exactly they are and what higher time frame sweep they need to actually trade a reversal, versus, it's knowing what's above and below and where you can get involved. That's it. Knowing what's above and below and where you can get involved. Where's the highest likelihood for you to find some kind of involvement that would be able to, yield you whatever point value you're looking for, right? So the 5 minute would depend on whatever the narrative is and wherever you are in terms of time. So we saw that here. We saw this. We ran this high, right? And we saw this drop below. We know this is London Open here, right? Yeah. Where are we here? 3 o'clock, right? So 3 o'clock into 3:30 here. Okay, so here's the high that it put in. And there we are right there. So do we trade in 330's momentum, or do we trade more or less after 3:30 at about 4:30, 5 o'clock when you guys do trade London? Because I want to be able to cover some of London's price action before we get to New York. We did 4 to 6. Okay. So you trade this half. And that half there. So this half could just end up being a wick. You trade the manipulation part of London, meaning that how you have OHLC, right? So if the open is here, right, and they were to manipulate the highs to go lower, right, then you would essentially be trading in that lower portion that now needs to manipulate that way and close here. So there's often maybe that reversal that's within that portion of London. And maybe it's trading back up to where, London originally opened. This is here's your 4 o'clock now. This little bullish candle running back into that 4 hour high. So here's how I would approach it, since we don't necessarily have any major highs and lows broken. We have this high into this low, right? With a close below here, right? But when we went up and took out this high here, we did not close below to get a close here and that validate anything. So this is us putting in a low, sweeping that low, right? Or sweep, if you will, within there. And that's the first sweep, and that's the second sweep that we trade higher, up above there. So if we trade higher and we close up here, then now we move this way. Now that was just, remember, the open would be here, and this would be a 4 hour wick that we would potentially be looking for the low of in New York. That's just the explanation of what I would be thinking and how I would be, playing this. I'm more or less looking to show you guys in New York, what to sort of anticipate, and once we get to New York, we'll start to go to the other New Yorks, going through, like that, just to continue to show the likelihood of what occurs around 10 a.m. So if this is going a little slow for you guys, relax and go have a shot of lion's mane and focus. So is anyone looking to take a long out of this? Let me just look at where we are. And I'm not saying this to prime any of you guys to take a long. I'm just saying, is anybody... Top of the range for double top. Okay, so you think it could take this low because that failure to close. So if I were to take a long, it would have to be something within this wick here. This is the bottom of the range. This is the top of the range up above here. But just knowing that we could lean down into this move back up, snap the low, and then, trade that way. End up here, I guess 10 a.m. runs there, or maybe New York Open runs there, and then we move back here. I don't know. We'll see. I'm just looking at the possibilities that's in there. But we know that this is our down candles high, right here, right? This is the previous candle's high up above, and this is, if you were longing, where you would consider taking your profit if price isn't giving you enough momentum to take it to that high there. Let's see. So this is body. This is the down. Okay, so the reason why I'm looking at that is because so if we're aware that these are 4-hour candles, right? Here, and here, right? There, and there, right? If we're aware that these are 4-hour candles here, what we know is within this extension up, there's an imbalance on some time frame, right? On the hourly, 15-minute, wherever it is, there's some imbalance within here, right? But this is also a wick, a body moving up into 2, and a little wick up top. And this here is just a wick on both ends currently of this 4-hour candle. And this 4-hour candle here is a body going up, right? So that has a body. That has a body on it. That currently has a wick on both sides, presenting itself as a doji. We don't know what it is yet until the 6 p.m. candle closes and shows us what that 4 p.m. candle closes as, okay? Because we know that we need that, we end up getting a wick up above an old high, or we get that doji that forms and then takes us to the previous candle's low, the previous bullish candle's low. We know that that would essentially occur somewhere up here that would potentially drop us back there. That's if the market opens up here. So if you understand that, then you won't be, you won't have market open up here, right? And you're buying to go higher. Or you're buying up here with no stop loss as it's ready to move back the other way and take that 4-hour low. So you're up here being brought all the way back down with, you just want to make sure that you're not in that predicament. All right. So nope, what do we end up doing? trading lower. This is 4 o'clock is here. So if we end up taking this low, if we end up taking this low, I'd like a, you know, potentially a trade back into here to, you know, short a little lower. Maybe from like here or something. Yeah, so this fractal here between 420 and 425 and the up move there. You see that bounce on there? Sorry, right at this high. The first tap there, the other tap there. There's a little MM just below it. So you see the reason why this is an MM is because this is the high, right? This is the low. We draw it across and we got this low inside of here, another low here, right? And this is us hitting it another time. So that's why I actually had it bouncing from below there, because I spotted the MM that's there. But just know that this MM that's here, right? What a lot of you guys need to understand is that this MM that's right here, that I'm saying is here, there's just a higher time frame imbalance inside of here. Right inside of here, there's a higher time. This just kept going up. So there's just a higher time frame imbalance that's actually hitting. And if that's a higher time frame imbalance and that can give it enough momentum to put in a new high, right? Then that's where this idea gets traded against, and you potentially find something that New York takes us up and then brings us back towards there. But it's all about how you frame your ideas and what you're framing your ideas in. So my ideas are framed around the stuff that I teach, not the stuff that the stuff that I use to trade, not the stuff that somebody else says. Oh, the reason why it tapped there was because that imbalance and then the inversion from last week, it also tapped around there too. No, it needs to be, you know, what it is that I've learned, right? And within the realm of what I trade within what I learned, right? So, super important. So anybody, what exactly are you guys looking for in this sense here? Now that we're here, yep. Somebody said that's a broadening pattern. Absolutely correct. Absolutely correct. Broadening pattern. We sort of do for a retracement. Waiting. Okay. So again, this is yeah, all right. Somebody said I want to see price at least tag consolidation at 2,300. Maybe scalp long. Okay, so that's around here. So you're looking for price to go short. Wait after the MM bounce. Okay. So you see, these are straight bullish candles making its way into with no wicks at the bottom. So I mean, not no wicks, but little small wicks. That means that the retracement on the 1 minute was not significant at all, right? And price kept pushing into that high, right? So if it pushes into that high, that's fine. You know, the idea would have been invalidated. Let me see what we have. So if we make it up here and we close, I would be looking for a move here to potentially swing higher. And then I'd expect New York to come down into these lows. That's if we get up there and we close, right? So I'm telling you where I would consider a move, when I would consider the move, and what I would be expecting after, within the next half of the morning. I know that anything long up here is short-lived because you're going to end up seeing price trade into these lows, right? And if you're on the side of you believe we do have a short coming out of this here, you would want to trail below these bullish candle lows, so when you get that candle closure, you could at least get that tap back in to run here. Maybe 6 o'clock opens, takes that out, and then runs that way. But all of it is speculation until it closes, until it actually happens. So you guys need to say, if this happens, then I'm going to do this. I'm going to respond this way. I'm going to take a trade in this direction if this happens, and then take that trade based on, you know, what you say you're going to do. Beautiful. So we ran up there and we closed. So I would be looking for price to retrace somewhere into here and give me a nice little move back up. So that retrace, this is now nearing 5 o'clock, right? So 5 o'clock is, if 5 o'clock continues, somewhere within 5 moves back to place a wick on the 4 hour. Right? So if this runs, right, this may be where that opportunity is to find a short back into this range. You see how somebody had mentioned they were anticipating this consolidation here? Or guess what? The guy that's anticipating price to come back to what? Spread hour open. Oh, it has to come back. It has to. At least in Asia, they said they get the cigar, and then in London, you know, they sometimes say they get the cigar too. I don't know what's happening, but if this doesn't start going back down soon, then that you don't want to be in that trade. So nice. We traded up above there. Let me see where we are. Yeah, so maybe somewhere around like 5 the early part of 5, I would expect that 5 o'clock candle to be that manipulation that way, and then potentially bring us back into where 6 could be down here. So we just see how these candles form on the way up. And as I mentioned, if you were looking for a short after this sweep, you would be trailing these these bullish candle lows. You see how you never got a rejection from out of here and a trade below? It would have been no entry. All right. So where are we? 450 now? So what are you guys assuming with this here? I'm thinking if we actually find the short, what we get is the doji into the imbalance, up higher again, right? Trade back below, head back in, right? And it would have to be somewhere around like the latter half of 5 that dips us potentially back into that region there, right? Remember, this is just going through the London price action with you guys, and then we're going to get into the 10 a.m. Thing. So it's 5 o'clock now. So what we should see, or at least let me get some of these drawings out the way. Remember that guy that we mentioned is down here? He was short back to his entry, and he's all the way over there. That will forever be hilarious. Like if that's your actual setup, let it come to you. So we have 5 here. Okay, so if we get something like this, we could take out this high, maybe even another candle take out that high, and then drop below that like that. Then I'd be looking to get back into there. Somewhere around there. And this is the main reason for why you guys are encouraged to trail, right? Especially if you're in a move from somewhere down below here, you trail. Bullish candle lows, you trail. Because once we get that extension up and price is looking to trade back the other way now, you're taken out for as much as the move manipulated into that direction before it moved back the other way. So what are you guys thinking here? I'm thinking we get back to this fractal here. But I'm waiting for a little more data. I know we, in that first imbalance, we'll see if that runs in a new high, and then we know it has to go below it, and then it looks to move that way. Like that, right? Unless they straight up just, sell stop this right down into lows. But we don't have, on the 1 minute, all we have is the 1 minute traded up above. All we have is that the 1 minute traded up above that high right there and then traded down to this low. Right there. That's all we have in terms of the wicks. So I am in favor of that move down, that manipulation higher, right? And then that drop down into there. Price doesn't have to give that to me though. So let me click on the next candle. Oof. So what y'all thinking? And rule of thumb, when you see stuff like this run higher like this, and then we begin to move back the other way, rule of thumb, stop using these imbalances inside of here. You have 5 imbalances. 1, 2, 3, 4, 5. Stop using these imbalances inside of here to frame a trade idea around. Wait for price to get back into your zone. Yeah, there are times where price taps into an imbalance and leaves you, right? But let it be nearest to the zone. Stop just trying to stick a trade into any imbalance that you see and trying to, take a couple points off of, when you could be far more efficient with trading off of a level in a zone than needing an imbalance behind you. What y'all thinking here? So 6 o'clock coming up. But you see what I said about how 5 o'clock, right? Now that we understand how these candles work and how a specific portion of the candle creates a wick, and we know that that wick is a one-way driver of a manipulation and then back in, right? Now that we understand that from just a bar standpoint, talking about candles, bars, now we know that there's a possibility that we could start out long in the manipulation phase of it, and then we see price head back to where the body now is pouring in. The body now is being created. You don't want to be longing when that 4-hour body is being created. You want to wait until the 4-hour hits its target, usually a 4-hour high or low, 4-hour sweep, right? And that's for the people who have difficulty scalping and want to hold trades. You need to hold to that, not that. That's the place or the POI that's appropriate to do those, hold for everything, I'm greedy special. I'm not saying that you can't do it, but you need to know where you are doing it at. Where is the most important thing. So we know we opened here, right? With this 2 o'clock candle. We opened here. We traded lower. We put in a wick. We traded higher. We put in a wick. And now this is us heading back toward the open. Us creating some sort of a doji. How fitting. But we still have a few minutes left on the candle itself. So this is the wick above. And this is the wick below. So now if you frame it this way, here's a new 4-hour candle open with a low and a high that both have a wick, right? Both have a wick. So we'll see, this is the 6 p.m. candle. Remember, New York open is in this 6 p.m. candle, right? So we'll see if the 6 p.m. candle moves that way for the next 4-hour candle to head that way. Or if the 6 p.m. candle moves that way, right, for the 4 p.m. candle to retrace and then move further down into those lows there. So you need to know the momentum that you're trading in. If I was taking a short somewhere out of here, I would know that I'm trading back into that 5 o'clock, pull itself back in to the body of the candle and leave a wick behind, because the 5 o'clock would be a part of that manipulation, right? And you can say, some people might say, oh, well, if 5 o'clock is a part of the manipulation, that's the closing hour, then the opening hour should be a part of the manipulation too. The 2 into 3. But that's where we had that accumulation that occurred. 3 o'clock, you see we traded through this low, right? 4 o'clock, put in a low. And 4:30, that's where our last low was placed. Then you saw us move back up that way, above those highs. So that might be like a perfect little AMD schematic that happened on a lower time frame somewhere in there, but I don't trade, utilizing any of that. It's just that you know that this is where the manipulation came from. So in the event that we go to take this manipulation out, the next form of manipulation as we're heading down is that there. So should you be longing inside of here, right? No. No longs inside of there because you know that the manipulation is lower down here. But we'll play this through and see. So this is what I was looking for. I was saying if I saw anything here on, let me see, did it hit that? No, not yet. Okay, there you go. If I saw anything here, right? There's the fractal up there, the bottom of it. If I saw anything here that hit the 50% of this fractal here, then I'd be willing to trade in the other direction at that fractal right there. At first I had it here, right? At this candle's low, and then you saw it drop lower, so I moved it here. And why is that? Because this is the reason for the drop, right? We had this low that put it in this high, and we traded below, right? We tapped back in with this manipulation on this side, and then we shorted below, right there. So this is where that move essentially came from, here. And this is still the 50% of the higher time frame wick as well. So instead of your short being in the 4-hour wick that's here with the high there, and you're targeting something like here or maybe the low or wherever it is that you're targeting, instead of it being there, it was instead moved to behind the fractal. And instead of the entry being at the 50% directly, right, the entry could be on the beginning of the fractal, or it could be the 50% of the fractal, whichever one. But this is me taking up entries that are more geared towards short entries because I'm expecting price to begin to look for some downside. So there's a push above the high on the 2-hour, no, the 4-hour candle, the 2 o'clock 4-hour candle. So now we know. Let's take some of this out. Now if we count, we have that there, right, as 1, and we break up above, right? We have that there as 2. We have that there as 3. This is why I say that your other things still come with you on this, the stuff that you're trading. So now that we have 3, we broke up above and closed. We said we're expecting the manipulation to be up here, right? and then the turnaround to move that way. So we'll see if that's what price still honors, but that would be after 3 swings. Then you start looking for price to move the other way. It's just that that move the other way could be accelerated at about 10 o'clock or 2. Let's see. So remember what we mentioned for 5 o'clock? That's the same job of 9 o'clock. So the job of 5 o'clock is that it provided the manipulation to create the wick on the 4-hour candle. Trade it back in. Right? So the job of 9 o'clock into 10 is essentially the same thing. And that's why sometimes you can see 9 o'clock open up like this, 9:30 open up like this, and by the time we at 10 o'clock, we already moving down the other way with that there. All right, so what are we doing here? Anybody trading during this time, during this hour here? $7.10. So you see nothing. We're still trailing, and this is why trailing is important, right? So remember that guy. Y'all remember? Let me reintroduce him. Remember the guy that was shorting to the POI over here? He said, I'm gonna go to sleep and throw a short on in there to hit that in there. Because price more than likely is gonna go back there, because if you mix profitable loser strategy with DTFX and the candlestick structure in here, and if you just put all that in there like soup, soup Asia's low, so I could just go to sleep and expect that, right? And my man woke up Let me stop. I can feel Panda watching me. I'm kidding, by the way, Panda. Please don't get offended. So we see this still. My goodness, you just follow it. There's nothing you can do. There's nothing you can do about it, because the minute you go long, oh boy, y'all know what's gonna happen, right? Let me zoom it out a little so you guys not feeling like you have to rush in. But this up here, this here is still valid. This stuff here, this is still valid. It's just that it didn't occur from here, and we had price continue to move its way up. So still what we anticipate potentially a move that way, and then but we'll see. I don't know if there's news on this day, anything. I have no idea. Look at this, y'all. So when we're bullish, you see these steep candles that are just running like this, When we're bullish and we see something like this candle here, you see this little tiny wick at the bottom, right here. That little tiny wick with this body right next to the wick, right? That means that it was full of bullishness. It was full of just if you guys look closely, actually, there's a lot of bulls that are in this candle, if you really look closely. But what a lot of people don't realize is that when we close this candle, they shaved off about 8 points from that candle as we went down. Now let's look at the candles prior to it. In the close, they only shaved off about 3. In the close, they only shaved off about point something or so. In the close here, they only shaved off about 550. In the close here, they shaved off about 650. But the criteria for that large close, you see 8 points. This is 6 points, 5 points. It's still a pretty large close too, but the criteria is that this wick has the open right next to it, and it pushed its way into there. That means that it was full of it. It was just little tiny wick opened, and there was still so much momentum that it kept trading that way, right? When that occurred, same thing as that, right? When that occurred, it occurred with that kind of candle, right? So I told you guys not too long ago that when I'm scalping, I'll trail these candles. I'll trail these candles low sometimes with a stop if we start to run, right? We start to run. But when I see this candle here, in that orientation that I just explained to you, what I usually do is, let's say my stop loss was not my stop loss, my take profit was further away, like somewhere up here, and it was making its way there. What I usually do is I'll have the next candle swing up above that, because I know there's a possibility that now we start creating some red candles around in this, direction here. We could start consolidating, whatever it is, drop the other way. But that candle on a run is the thing that usually says, hey, you might want to start putting the coins in your pocket, right? Because you got them in your hand, but they're not yours until they make it in the pocket. That's that kind of candle, that style candle that I'm looking to now do that with, because then there's the possibility of the turnaround potentially happening somewhere around here. So we have 8:30. So we know that both can be manipulation times, right? 8:30 and 9 o'clock. Let's just leave it there. It's just on the other side of 10, we'll see where we are, because we could just be tapping back into whatever those guys did there and then trading lower as 10 o'clock to now look for a low from, the higher time frame, which would be, this would be the 6 o'clock low here, right? No, this wouldn't. This would be going back to the... This will be going back to the 4 o'clock doji right there. So yeah, let me leave that there. All right. And by the way, when my take profit is here, my stop loss is also here. There's plenty of videos that have I mean, sorry, plenty of pictures that I have showing that management style. You want when price is running away, you want your stop loss to be behind the candle lows. But when price starts to get smaller and smaller as it's heading to its target, you want your take profit and your stop loss to converge with one another until one of them get met. So that's why I go through the candle lows and I start paying attention to what's here and what's to the left that we might be able to reject down on, or if we can continue trading up above that there. All right. Boy, they got it with the sleep when he wakes up. Oh my days. She's gonna be shocked. So look, here was a sell stop activation down below here. All right. Sell stop activation down below here. This bullish candle putting another high, and then we traded down below to its low. We tapped it in, and then we traded up above and took it out, right? So we had one there on the way up. And that's where this could begin its ranging to then dump that way. If we close below here, I could see a move back in here looking for something down below. So look at that. That high was swept right here. This high to the left, this 8 o'clock high, 8:10 high, it was swept by 8:30. And this is that low there that put in that high. Yeah, alright. So here's 9:30, looking to get up above, or did it already? Not yet. Looking to get up above 8 o'clock. And then 8 o'clock's low is here. Right? So if 9 o'clock comes here and does whatever it does here, 10 o'clock can look to get 8 o'clock's low. 8 o'clock and 9 o'clock's low. Because remember, whatever we're expecting has to be here, there. That's that first imbalance. It would essentially, fail. You would expect some larger imbalance down to be created there. Maybe tap back into that imbalance, then drop again, and then look to trade back to the same imbalance that it originally rejected from. But let's okay, so here is 9:15. What are you guys usually doing around this? This is 9:15. We know this is 10 o'clock. We know this is the 4-hour low down here. So we know that this would end up closing 10 o'clock up here. And this would end up being, ton of imbalance through here with a fractal that's back below here. And this is why it's important not to get ahead of up candle closures. It's important not to get ahead of them when they happen. You want to see that this is the activation of that sell stop, and then we traded higher, right? So you have the same thing again here, the activation here of that sell stop, the down candle below, and then we trade higher and take out the high. Then we have the same thing here, right? Here's the third one. There's no close, right? So that closure is saving your skin because you need a closure below the down candle and you're not getting that. So it moves up again. But we have these buy stop activations that were occurring, 3 of them. We already have our 3 swings up, 3 larger swings up. This is leading into market open, and now the 10 o'clock, the 4-hour candle. So what we want to do when 10 o'clock opens is 10 o'clock, let's say 10 o'clock opens and manipulates that way. What we want to do is if it manipulates that way and then moves that way, you want to be able to find a trade in that momentum, that 4-hour candle momentum, because oftentimes it's heading to that 4-hour low or that 4-hour high. That's why I said I wish I knew what I had back here, because then I could better judge if we were going up to that over there, or if we were gonna have some sort of pullback because where we were back then. But I don't have anything, so it's just blindly going on what we see here. So that's 20. This is 25. Next candle is market open, right? So if we make our way up and we come back to here and that doesn't put in a new high, then we're looking to go below that there. And we could run below that, go back in there, and then go that way. Or we can move that way like that if they wanted to drive price higher. Again, I don't know what's to the left, so I can't be 100%, accurate on this. In terms of where I'm expecting my pullbacks, because you guys know I'm like, hey, I wouldn't look for a short until we got there. Let me put this here just in case we run out that way. So for the people who have an issue with trying to time the top, do you see how in Asia this guy tried to time the top, right? Just to get back down here a couple points away, trying to time the top instead of being shown the top, right? We were shown a couple entries within here that could have worked out. But it was because we had multiple closures followed by some trades back in, then trades out of it. Then this was a range right here, right? So you didn't even have that in there to try to time this as the top to go down, and ended up in so what? That's nice. What is the job of the last 30 minutes? What is the job of the last 30 minutes of a 4-hour candle? This is 9:30. What usually could show up on the other end of that 4-hour candle? So because we placed an imbalance here at 10:30, what I would think is that this first imbalance right here has the possibility of putting in a new high, and then that move going back below it is what will take us down. But we'd have to get into 10 o'clock to confirm that. Otherwise, after 10 o'clock, this is where I'm going to show you guys the thing that I was talking about. And then we're going to go through every 10 o'clock after to speed it up. So what are you guys thinking here at 9:45? Okay. There's 9:30 here. 9:45 there. So what you would want is, if we can close below this 9 o'clock, right? Now, that puts in that 9 o'clock up candle. That 10 o'clock runs below it, trades away, and goes back to where 10 o'clock is. That retest that comes from 10:11 could be the thing that moves down into the 4-hour low. But we still got to be shown each step of it, each step of the way. Most people are only on this. They see price drop into this imbalance, right? and they're taking a quick scalp like that during market open. Quick scalp like that, or maybe chasing a low and taking a couple points there into that imbalance and cutting. I'm not saying that there are people who don't do it and get paid, but what you want to do is utilize something to trade with every day and not just trying to quickly capitalize on what looks like a down candle. Or what looks like it's tapping into an imbalance to put in a new high. So you guys see how when the market opens up and you guys think we are short, right? When the market opens up, this is 9:30, trading back up above to here, right? That happens and you're thinking that we're short, right? So you go and grab the break in here, the 1 minute, maybe market structure shift inside of here or something. You grab that in there, and you take a zone from there at market open, right? Because you already made up in your mind that there's too many swings going up and it has to come down now. And we open up and whoops. So be mindful of not knowing where you are. So remember what we said, the 9 o'clock, right? The 9 o'clock's job. The 9 o'clock's job is to put in the manipulation. What's the manipulation? The wick, right? So here's 9. Here's 9 o'clock open right here, right? There's 9 o'clock open, and here's 9 o'clock close, right? So on a 4-hour candle, that's it's the 6 o'clock, right? Yeah. On a 4-hour candle that's been going up from here, even if you feel like this is not justified as how high price reached into whatever it reached into and how it was supposed to come down and it's pure manipulation and blah blah blah, even if you felt that way, you need to remember that last hour, and not only just the last hour, but the last 30 minutes portion of it, right? Last 30 minutes. I would even say 15 even. That move that way is just putting the wick in the 4-hour candle. So now you have the high, you have the close, you have the open, and you have the low that's down here. As what? The next 4-hour candle opens and the next 4-hour candle does this. But guess what? That's a 1-hour candle, right? Starting whatever the job of this 4-hour candle is. The second hour, right? could be that consolidation or something like that. The third hour begins to, you know, expand its way out. And the fourth hour sets the manipulation or the tone for it at least, and drops the body below like that. So even though I'm up here looking for a move, you know, whether it was a short to trade down into this imbalance here, even if I was up here doing that, because I have my 4 swings already, so price limits me from being able to, you know, take any longs until one of the lows are taken out, and there's no lows taken out yet. So I wouldn't be able to long until we got through here. But even with price moving that way, right, we're still able to find little scalp entries that agree with the idea of it, right? The fourth hour in the 4-hour candle being the manipulation, so that dropped us down right there. It agrees with it. And I take a short in agreement with that idea of that, knowing that that last hour is manipulation. I'm trading that. Otherwise, I'm waiting until the next candle opens and gives me that direction. So let me go here, and we know the 2 o'clock candle is here. This is 10. So this is essentially what I wanted to show you guys. So are you guys familiar with where is it? Actually, let's just put it this way. So when the market opens, right, that run, the run's that way, right, and we trade away from it. If we close up above the high or the low that market open put in before 10 o'clock, right, so we know, we say around 10:30 you're expecting at least one more high before you're expecting price to turn around, right? So we put in this high, we put in this low for 10, and 10 goes and runs the 9 o'clock high right here. What you're looking at with this is 3 options. You're looking at the 30%, right? And, you know, everything else that's located in there. You're looking at the down candle, this here, right? And what you're paying attention to is, in the event that we trade away, that closure somewhere around like 10:45, 10:50 or something like that. That closure a lot of the times leads its way right back to 10. Now, it's not exactly to 10. Some days it taps on top of 10 and it leaves. Some days it'll trade through the low of 10. Some days it'll trade towards 10 and stop and then continue higher like that, right? So you need to understand this from multiple angles. It's not just down candle closure after 10:50 trade, you know, like up candle closure after 10:50 trade, 10 a.m. target. You know, you're not looking at that, but This is essentially what you could end up having, right? So 930 opened up here. We put in this low in 930, and we put in this high. This. So we break out now. We break out of the high that we just put in here for market open. Here's so in this region here is where I would be looking. Should we end up trading back into this, where I would be looking long? Somewhere within here, right? The invalidation is right behind here, but that invalidation being behind here does not mean that I cannot take a long should price end up longing. It's just that that long might show up from a lower portion of that range that's there, right? So let's play this forward. And we said around about $10.50 or something. Is it a $10.50 macro? Let me know. I don't know. So you guys see this in here? Let me. You see how we get down into this? Let me just. We get down into this pocket here, right? So the invalidation is just behind this low here, right? You take that there, you tap into the 30 of the zone that I'm looking. Remember what I said, the 30% is down below here of the larger range, but you want to look at what's there to kind of, target your entries towards there. It's not saying that price can't end up down here, because price will end up, down here at some point. First imbalance puts in a new high. After it puts in a new high, what ends up happening? You can get another high, and then we go and take the low out that the first imbalance puts in. Like that. Now we're back in there like that. And now we've been ranging over, a couple hours or so. So, doesn't mean the price is going to, leave you. You don't have to chase it because it's running that way. Because at the end of the day, price is looking to get back to, somewhere within here. Somewhere back into that 10 o'clock. Or back towards that 10 o'clock after what? The closure, right? So there was no closure here, right? Put in a wick right inside of here. And that within itself, little fractal inside of there, after a little sweep of a down candle, a little sweep of an up candle, but the sweep of an up candle automatically makes people think market structure shift. But if there's no body close below, then it's normally not a market structure shift. Now, could there be a market structure shift in here? Yes, but oftentimes we know, look at this here. This 930, first imbalance, putting a new high, right? We get that new high, we know that that run up, this was toilet paper, people. They traded down below, traded back up to cook them. We know we can get this high and another high potentially here, and then look to trade back into this down candle and potentially that low. Because of what we already have going on with that whole run, the moving up, right? So that's a swan song long for me, right? I would be longing that to like here, potentially even the high, and maybe trailing it on the 1 minute time frame, the up candle lows to see exactly where price ends up landing me. If it ends up taking me out with just 10 points, then it's just 10 points. If it ends up taking me out with more, it ends up taking me out with more. But I knew where I was going to start, and it was right there, right? But right there is not saying that I'm starting here to take a trade that way. It's saying that I'm starting here to take an entry off of here, knowing that the entry could dip back into here. So it's looking at it like this. This is so ugly. What happened there? Oh, what? Oh, oh. Why his arm look like that? So that's how I find those little wick entries that you guys usually see me take. I love to take those. The beginning of the wick tap, even if it was the center of the wick tap, usually it's tapping into a POI, creating a wick, and it took a previous low and then came back into the range and closed. It closed above that previous low. So that's a flip in there. Remember what I talked about with the end of the candle being the manipulation, right? So you see this here? This down wick right here? So that was the manipulation down in there, right? So when we opened up here, whatever was within here, we closed up above to trade that way, right? So all I'm doing within here is tapping into a closure that held, a flip that's inside of here. And I'm taking the flip and taking it out of the zone to the next zone that's up above, or to whatever the narrative is there. So that's, how you guys see me in those wick entries. It's taking that portion of the wick during times of momentum. Well, beat, look at that beautiful target, man. Beautiful. So now look, you have this consolidating here, right? That's happening. This consolidating is happening somewhere around 10:50 or so, right? The 10 o'clock candle is, somewhere down here. So there's a possibility that you can find a scalp going into here, even if the job of here is to move it back that way, right? So you would just want to wait for one of those candle closures on the y'all listen to me, on the 5 minute, not on the 1 minute. On y'all see me on the 5 minute. I'm here for a reason. We're gonna go through all the other 10:30 sessions and show it, but on the 5 minute. Oh, I clicked the wrong button. I didn't know that it was gonna run down like that. So I apologize for speeding it up. I didn't mean to speed it up that way. I wanted to go candle by candle for us to see. But this we just we're beat. We're back the other way. So this 930 is low right there, right? So what I'm looking at here And this is why when the market open comes in and you guys are in those shorts, know that you may not be in the final short. So just relax, take your profit, pay yourself, and take a step back. So here we are in this MM right here, right? So you see how we're framing trades now around our other ideas, right? So this is the 5 o'clock candle, 5 o'clock candle. This is the 5-minute candle. After 10 o'clock, around like 10:50, they traded back to the 10 o'clock candle. I tell you, sometimes it trades to the 10 o'clock candle. Sometimes it takes the 10 o'clock candles low. Sometimes it won't get to the 10 o'clock candle, but you have to trade it by, trade by trade basis. So, we get down there to this MM. Obviously, with this MM, what we want to see is if, price gives us something below here, we know we could run back into here, potentially run back into something there, reject back down again, and then move back up like that. But that's all speculation. We'll look at what price is doing now to make our judgment calls. And this is why when you guys are trading, and I tell you guys, you don't know where you are, so pay yourself with a 1-to-1. It's very, very important that you guys do so. Look at this right here. We tapped right into this 1-to-1 on 10 o'clock, right? Tap right into here. Paid yourself right at the high of 1-to-1. How much is that? Let me see how much points that is, because y'all be acting like y'all starving for points. That's 20. Come, 20. Come on. 20 point banger. There's on this, and they think they need more to go up to the high. Please. So beautiful. That was a nice little wick inside of there. Traded right out. Delivered that 1-to-1. Cool. You don't need anything else. You need to stop thinking that you need a bunch of 1-to-1s, because you don't. I promise you don't. I know for a fact that you don't. Ask me how I know. So let me get back here. So all of that to the left is speculation. We're just gonna look at what we get here, right? If we end up trading down below here, right, we want to see price go back up to this same range up above that we left out of, somewhere down here. So we're gonna assess that. Maybe drop through that low there of that. Remember that candle that I said I would have taken profit on? Maybe through that low was there, because I would have taken that profit, and look, it just ran all the way. I'd have forfeited all of that profit, but that's fine, because I can find a ton of moves all the time. That little fractal, did we see how high that fractal went? I don't think I showed y'all the point value on that, right? Because I need y'all to understand that, oof, we even hit the 50%. We even hit the 50% and gave a 1-to-1. 1-to-1, he give me my money. Come on, Shimon. So this one here, right? Where we at? This one here ran up to that. Look at that, right to the open. I tell you, take the profit at the wick. You don't know if the high is going to be taken, and you don't have enough money to put in a new high. So take the profit at the wick. Bam, 20 points there. I'd have been like, okay, cool. Yeah, I'm just looking. I'm browsing. That's it. Every time I go to Lululemon, you need help? I'm just browsing. Get another 20 points. Great day in the morning. Hold on. You went from the break-even bandit to the 20-point bandit. Just following this. Or I didn't even talk about the short side. We already talked about trading back to here. So I didn't even talk about the opportunities there, because I'm no bear. But the opportunities are there as well. We know what? We said somewhere around, right? 10:50 to 11 o'clock. We're looking for price to move. You guys go back to the recording, right? I know. You guys go back to the recording. Because the last recording, only 43 people watched. And I was like, oh, okay, they looking for signals here. I get it. Let me see what Jim Cramer calling now. So, We drop into that MM. Guess who's not taking that MM? Me. This is the fourth tap, right? 1, 2, 3. Right in. Wait, let me see. Hold on. Trade above. Tap right there. Tap right there. Tap right there. There's a third one here. Yeah, that's the fourth tap, so I wouldn't be taking that. I would wait for price to drop below here and give us a 5-minute candle closure to drop back in and potentially trade higher. And if, even so, if we get that first wick up above that high and we fail to close, right, I would expect us to trade lower, and that's where I would be expecting that candle closure. To do what? Trade back up into here. That's how usually those afternoons turn out to be, right? So do you guys see how it hit the low right there that we were anticipating? And then that run back into the range there, right? And this is all happening without even the next 4-hour candle playing out, right? So now what do we have on this 10 o'clock candle? What do we have here? So if we opened here, right, we have a wick up above here. And anything below here is a body that's now putting in a wick on this side. The 2 o'clock candle is here, right? It's the first run of the MM below, right here, right? So does this tap here, right, somewhere around here, move it back to here, and then move us back into that range up above there? I don't know. We'll see. This is the zone here. So that's the low, that's the body closure. It hit the 30% trade away. You could potentially see a 70% tap. So if you were looking for any type of short to trade back down because you needed to just take a short, you would more than likely look up in this region to move back the other way. Otherwise, if we reject from right out of here back down, that's fine too. But we would be looking for price to potentially move us down back in, and we'll see if the next 4-hour candle just ends up as a down candle. But knowing what you're trading in is, you know, the best thing for the 4-hour candle. We're at 1 o'clock, right? So what's the job of the last hour? What's the job of the last hour? We usually create a wick, right? So we'll see. We'll see if they put in a body and a smaller wick here. If they put in a body and a smaller wick there, like right here, then you can see price potentially tap in here, go down like that, there, move back up there like that, trade back in, trade here, and then back down like that. And then you end up having a whole day that moved just like that based on a 4-hour time frame. But let me go back to what's actually there, and we'll go through it without all of my drawings. And I'll more than likely cut this backtesting part of it out. So there's that rejection that we talked about from here that could bring it right back to those lows again. And remember what I talked about with the the 5 minute candle closure that trades back to that there, right? Here's a 5 minute candle closure right here that trades back to that there. So it's around this 10 a.m. Sometimes people end up here wanting price to go higher at 10 a.m. and it takes them all the way to the basement. Sometimes people want price to go lower at 10 a.m. and it takes them right back up there, you know. So this is not every day. Obviously, you're going to have to back test much of this, but you want to look for it on the opposite ends of that 10 o'clock, right? Because you know you're trading in the direction of what this 4 hour is doing. But we're going to be able to do that during the live streams too. So don't feel so overwhelmed like you're going to have to do this all on your own. This is the direction that I'm moving many of us into. So, you know, don't be discouraged. You're going to see we'll start streaming Market Open now. And now we'll start looking for entries just after 10 o'clock instead of starting to come on at 10 and looking for entries at 10:30. So you guys could see how this is implemented in real time. So here's the low. And there's the wick. So if you look, this is a wick above and this is a wick below. So where's the body? Where's the body of the 10 o'clock 4 hour candle? The body is here, right? So if the body is here and there's a wick up here and there's a wick down here, and we know that over here there's that wick right here from the previous 4 hour candle, and we know that the low from that same candle is here. When we create that bullish candle, we put in that doji, right? What do we often expect? We expect the previous candle's low to be taken out. So that would be somewhere within this region. Now that's just me, you know, surmising or even predicting what could potentially happen here, right? So if that could happen there, then if I'm looking for longs that I want to hold, I would look for it down here, right? Because of that there. And anything else within here, I would just be scalping. And I know that up here, I would more or less be looking for you know, shorts that coincide with it. So you know, these are highs. These highs are not a part of structure. You know that this is an MM right inside of here, right? So, you know, there's a possibility that you could reject at the MM and you could reject up above the MM to trade back into that, right? So you already have that framed out. You would essentially just wait for price to get to those regions. Remember, this is a wick, right? This is that 4 hour wick. I imagine this is a 4 hour candle that's trading this way to then move back that way, but we'll see. Whoops! You see that MM rejection? How lethal it is? Yeet! So nobody would be chasing longs going into there with knowing that we have that rejection right there, right? And there's another reason why this is rejecting, but you guys are just not there yet in terms of the curriculum. But nice rejection there. Could there still be another rejection up here? Yes, absolutely. But price chose to reject from here. You had the little turnaround right in there, maybe on the 1 minute or something like that. And you had this candle here, this 1440 candle, just belt out the other way. The drop. Remember, where's our previous candle's high? It's 2 o'clock now. Here, right? Where's our previous candle's low? Here, that's the 10 o'clock candle, right? But where's the other low? Here, right? So you know that there's a possibility of an entry that goes back up here but ultimately leads there, but then could go like that there. Now, that's just all speculation. Again, price could just trade higher if it wants to. It's just, you guys have to get to the point where you're able to know what you need ran before taking that entry where you feel like you want to lever up on. You need to know where that needs to be located, right? That entry that you want to lever up on or you want to hit the home run from, it's where. It's all about where. They are there on the chart, but you need to know where. And some of you guys are confusing the little scalping that you do within here with the overall picture of what's happening out there, and it's not the case. So you see how that bounced on the wick, right? That's the 50% of that 4-hour wick, the 10 o'clock wick. Right there, you see that? Let me see. So if we could get down here, I'd look for price to go in here, then back that way, and probably find a short down there. Because it looks like it's leaning down in there, but otherwise, if it doesn't present that short opportunity, I'll find it up there. Y'all see that? You see the low it took? So you see right here, or even here, why that chase even, because that's what I would consider as a chase. If you're not getting in by a zone, then it's considered a chase if you're moving, trying to move with price and get ahead of the momentum. But even with that, that 4-hour low is what we were looking for, right? That 4-hour low. We kept saying it over and over and over and over again. It's that previous 4-hour low that we're looking for. And here's a candle closure. So here's essentially what I was saying with trading back to that. I said when we have that candle closure, right? You could often see us trade back to that 10 o'clock. When we have that candle closure, you could see us trade back to that 10 o'clock, right? So even in the afternoon, when we trade away, right? We trade away from that candle closure, essentially, even if it leads to another low and then back up again, it could lead to the same thing, that again. right? Well, some people might want to see this uh, candle right here, this 1550 candle. They might want to see it short because of the displacement. It could still lead right back into the range because of that candle closure there. So there's that, struck out the low. What is this? This is, oh, the market already closed here. Okay, so now we'll move this back into 10 a.m. and we'll speed this up. So we have that there, right? Let's move this all the way up to 10 a.m. Somewhere there. Somewhere there. Somewhere there. Don't worry, for you guys that got OCD, I'm moving it to 10 a.m. Okay, then we'll just leave that there. So here we are, heading back to New York. Let's take our last 4-hour candles. We know we have Asia's low here, right? I'm aware of that, so we want to see that get taken at some point. But we know we have this previous zone left behind here. Probably see us run here. Hopefully 10 o'clock can be that manipulation back over there. But if market open comes and manipulates this here, then oftentimes that candle closure that's happened on the 5-minute back up again, that's usually valid to trade in. Just know that you get that what? Zone at the bottom of the range, run that, take the high of it, and that's when you're looking for price to move further up. But again, this perspective of trading that I'm even discussing now, we're going to go through live. We're going to see how taking live trades, right, with it, based on the POIs that it gives, right? You have to be willing to look for POI in that direction and at that level, right? Manage your risk appropriately there and take that entry and watch it deliver. And we have to watch it play out, you know? So I'm going to be shaking some of y'all up, asking some of y'all where y'all entries are at, you know? If you got cooked on an entry, where's your entry? Explain why you took it. Because we're in this together, but you taking entries like it's just you. You know, so we know that this is a 4-hour high right here, right? With this being a new 6 o'clock candle. What is the job of the 6 o'clock candle? I don't know. But the job of the hour, the last hour of the 6 o'clock candle is to put in the manipulation, right? And then should 10 o'clock want to run that manipulation and then trade in the other direction, it will. And that's whether the manipulation is up here or whether the manipulation is down here. So you see it's still, let me do the, and this is where 8:30 news might skew some of this for you guys, because obviously 8:30 news is 8:30 news, right? So it might skew, like 8:30 news could manipulate below this. and then market open can manipulate below 8:30, and then run the other way, and then 10 o'clock can tap back into market open and then expand into the 4-hour direction. So this is 8:30. So you see the volume candle coming in. This is 9 o'clock or 9:30. Sorry. Y'all know how at 9:30 drops, it has that way, and then you see it make its way back up, and you don't know if price is gonna reject out of here or trade higher there, but you're trying to take a short somewhere out of here, and the market goes to the other side. You gotta be mindful of that. So this would be the zone at the bottom of the range if this actually manipulates this low, then trades higher. We can trade back into that zone, remember, and take that low, and then look to run up like that. Unless we start to get those imbalances that are forming and running us into that direction. There's at 10 o'clock. So $10 o'clock is here. Remember what I said. 10 o'clock can form. 10 o'clock can happen here. And when we get that down candle closure. Now, rule of thumb. Y'all ready? Rule of thumb. Down candle closures, you need to consider taking the second one and not the first one. When it comes to this happening around 10 o'clock, you need to consider taking the second one and not the first one. Because the first one can happen, right? And then the first one can happen down below, and then price go right back up above there. And then the second one happens up there, but you're unsure because what happened at the first one over here, and then you missed that move going in that direction. There's a lot of overthinking. Trading comes with a lot of overthinking. So you see, we mentioned 10 o'clock taps back into market open, right? It's running back into this market open candle here. That's the 10 o'clock there. If we get a run below this in some sort of fractal here, then I'll look to take a short out of the fractal back down. But if not, then I'll look to take a short back near up there to trade back into the range. And that sometimes can be the only trade that you would essentially have to take. So let me see. Yeah, so that's given if we close below that, right? So this is still that down candle that took that low, right? That's still that down candle that took that low. But as we mentioned, with the down candle, price can come back to the down candle, take the low of the down candle, trade back in, put in a second low, and then go back to run this high. But we just know that we're not too far away from 10 o'clock. It's just here. So no close below here, right? so I couldn't take any short at all that I thought I wanted to take because there's no close there. Little run of that low, but I probably want to see this 930 get taken out first, and if we can close above this 930, then I'll revisit that to take a long off of that, right? Because then that would be getting up into here, and this is where we would expect that to occur, moving it back into that region. And that could be after the 4-hour high is taken over, or just before it, because the 4-hour has a wick in it. Let me just put the wick here for you guys. So you see right at this open, right? The 4-hour open, the 2 o'clock open, and this is the 2 o'clock high right here. You see the 2 o'clock closed was down here. So this is a wick up above 2 o'clock. And that's why I'm saying that it could happen up there. So those are my if-thens. Anybody inclined to short from here? Or are you guys looking for higher prices on this too? And that was a nice little flat candle that it ran right up above right here that sent us back that way. But we know this first imbalance can put in a new high, so we want to pay attention to it. Should we end up closing with an imbalance downward though, and exchanging that, we could look to go and take out those lows. So for, okay, most people say higher prices, that's fine. Wham, nice imbalance, right? Bam, first imbalance. You see how it runs up like that? Goes up above this down candle. I don't take down candle entries and highs, so it's not something I would be considering. There we go. Now we took out that high there, right? No body closed yet. How do we not have a body closure? Yeah, that's nothing. So in the event that this swings down, I'll take a long out of here to go back up before it actually moves back the other way. But I wanted to see a closure before taking an entry out of here, but I don't have that closure yet. It looks like a slight closure like that. You see that? But I don't like to use slight closures. I like to have a definitive closure there. So unfortunately, I can't engage in a long, even if I, get a slight closure up above there. So there's a closure with a down candle. Okay, that closure would lead me down here though. Either to that 378 or back to that 338. That I would be looking for a long, not up in these highs here. So there's that push higher, right? First imbalance puts in a new high. Second time, did the same thing over here, put a new high over there. That's fine if I'm missing all of this. Like, you know, people think that because they haven't gotten into, you know, some sort of entry here, then, you know, it's going to be impossible for them to find an entry. When that's furthest from the truth. You know, like you see these lows going and you have no high that's broken yet to put in a body until we get, you know, the highest point is here. So until we got there, right? That doesn't mean that you can't long these lows. That doesn't mean that you can't short these highs, right? That just means that in terms of definitive structure, you have none. You have this low and this high with price trading into here, back and forth into here, down in here, up into here, down in here. Then it takes the high and closes, right? So this ends up being the zone at the bottom of the range, and you know if price splits this, then you can find a trade that way. Otherwise, you would find some sort of short within here to move back down into that direction. That's if I could not find an entry. So we talked about the so 10 o'clock is here, right? That's 10 o'clock. We talk about the candle closures. There's a closure there that tapped into there, right? And traded lower. We said don't look to take the first closure because oftentimes price can trade higher than that, right? So do we have any other closures here? No. You have that low that came from this high, but that's not a closure. So if anything, now you have this MM here. That flat candle just inside of it right there. Let me see. 3 and 2. So somewhere around here, and after this sweep, could be nearest to here. So I'll more or less look for a short up in that region there. You know, if I wasn't able to find anything below here, right? And it would be that down candle closure that I'm looking for to trade back into, you know, like these previous ranges up here. You got a low here, so maybe that low would be the target, the 424, if we get into here. So you see, if you're trailing, it just gave nothing the whole way through. You just missed this whole move. That's it. We take out this high, and now you know what occurs here. Accumulation above an O high. That accumulation can trade higher, trade back into the low, right there, and that first break is just to put in another high above that. So this would still be, 1240, still not finding much. But that short would be coming. I think it's like here. Let's see if I can map this out. Here, 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 here. Something like that. That's what I'd be thinking. Otherwise, if we keep trending up like that, right, then I'm gonna look at, the market structure up here. But what this is looking like based on these lows down here, it looks like it's gonna give me my fourth swing and then pull back after. And you see how my plan is still inside of it, right? Anybody taking a run at this low? Hey, take care of yourself, Alexander. Listen, you got enough information to teach a whole country how to trade. You just got to get over the hump of you. You follow your rules. Be the best rule follower in the world. Let nothing and no one, not even yourself, distract you. Because all you need is you and your rules. Oof, but look at that candle. Remember what I said about the low of this candle? When it gets no resistance really at the bottom of it and it pushes up and it squeezes back into there. That either runs there and goes back down or takes the low and puts a body in the other way. But the only thing that we're missing here now is the 2 o'clock candle. The close. And this is the previous 4-hour candle that we just took. So remember what I said, when we take a high of a 4-hour candle, know that we can get a pullback into that 4-hour candle, right? And you don't want to be longing from that momentum that's there. So it looks like it could make its way somewhere back here. So you see it end up trading below the low closing, tapped into the wick there, and then, well, almost the beginning of the wick, and then trade it back below. So we'll see if it gets back to this MM that's through here. It's 473. Nope, look like they just consolidated on close. Yeah, so that's closed. Now let's run to the next 10 a.m. real quick. And do 2 more 10 a.m.s and then we're out of here. Because you're gonna see the similarities in it. 10 a.m. there, 10 a.m. there. Let me just play a few of them through. I'll just give 9:32. So there's 9:30 and 10, right? Here and here. And then we'll find the next one when it opens. But at 10, we're going to look at that 5-minute candle closure and trading back to 10 o'clock. So here's the 9 o'clock, 9:30 manipulative part of price, right? That dropped us down and put this wick here, right? So this is us trading back into a 4-hour wick, potentially up above that 4-hour wick and then down below that 4-hour low. Because there's quite a few lows here. And there's both London and yesterday's. And if we close below here, right, I would be looking for a move back in there to take lower. But if we close up above here, I would be looking for a move to either take back to the high or even above the high. Because remember, look at what I'm doing here. If we have this and then this, right? And we have this and this, right? And we have this and then we have this, right? That's still following market structure. But if we have that leading into that, right? Now that's following the new path of market structure based on the higher time frame, right? Based on all of that that's there. So I'm essentially just anticipating, structure after the run. So if we get that, then that's fine, but it gives me a point of where to establish a bias, right? Because then the minute that we get down here, the minute that we trade below it or something like that, we know that 10 a.m. closure or that closure after 10 a.m., 10:50, 11, 11:10 maybe even, we know that that's oftentimes looking back for 10 o'clock. So whether it's up here or whether it's down there, it's looking back for 10 o'clock. And what does that end up looking like? A broadening pattern. You see that? It ends up anticipating how to trade it based on the extremes that it goes into. So we have 10 here, we have 1025 here, this up candle. We know that if we get that low, then we know what we're looking for to trade out of it. But if we end up trading a little lower than it, we know that we're gonna move back into that range up above. And then likewise, if we go higher, we move back into the range below. Remember, this is the 10 o'clock candle and it closes at 2. So what is this doing right now? This is the 10 o'clock candle and it closes at 2. Right here, right? With the 10 o'clock low being here. And I think this is the 9 o'clock low. Yeah, the 9 o'clock low too. So the 10 o'clock low, the 4 hour, so there's 3 4-hour lows over here. There's 2 1-hour lows over here while we're accumulating right here. I don't know what's actually occurring here. I don't know if this is like FOMC or something. But you could potentially see a move that way and then a move that way. Unless it chooses to run out all of that, come up here and run out all of that. That's if it's news. I don't know if it's news. So let's keep the drones on the chart. So FOMC took a daily high, looks like a weekly high too. Oh, it's the high of the week. I took the high of the week. And then it's up here. So we see this is FOMC. It ended up just trading higher, right? Just ended up trading higher on the day. But if we look at where we tried to time our shorts, right? Up above here, right? Up above here, heading back to that 10 o'clock right there. Remember I said you need candle closures? You got a closure there, moving back to it. You got another closure there, moving back to it, even in this consolidation. But if you traded here, you would go back up to it. And if you traded here, you would go back down to it. So with this here, we eventually put in this wick, traded back into the wick, and shorted down near that 10 o'clock candle. But we didn't quite go to it. So let me move this up for another session, and this will be the last one that we run through, because I'm sure you guys are tired. Some people are probably sleeping here. So 10, 9:30, and 11. So here's 9:30. If that goes down, here's 10. If that goes up, here's that 11. It moves back to 10. So it'll be like that. Or this the same thing vice versa. If this goes up, if 10 comes down, and then 11 o'clock we're here, we move back to 10 that way. here's 10. We have nothing to the left, so no. I think this is all-time highs. So that's a 930. See, at 930, remember what we said about the 4-hour wick, right? So if this is a 4-hour candle and this is the 4-hour body here, right? What is the job of 9 o'clock, 9:30? The job of 9 o'clock, 9:30 is to leave this wick in that 4-hour candle. So here's 10 o'clock now. New 4-hour candle open. 4-hour wick below here. And we would expect some of this to get toasted for price to trade back into here. And then what? Move us back into maybe from down here 10 o'clock. But if it moves us up here, it's back into that there. So here's 11 o'clock. That's a down candle closure here at 11. And we took out the previous hour's low at 10. So the previous hour's high is up here. Market opens high is still here at 9:30. And this is the beginning of the wick right here. And we have this here. So if this PLI doesn't hold, then it moves into there and takes that. All right. So there's the PLI not holding. There's the beginning of the wick that's there. 50% of it. And you see this right here. Where is 10 o'clock here? Yeah, 10 o'clock is there. So in the event that you trade up above to here, expect it to drop back into here. Back near there. That's in case it doesn't do that now. You get it back into there, and then you get it back into there, like that. So I look for a long up here, and a short up there, and I look to be long down below here. Yeah. That's tough. It's a slight candle closure, but it is a closure. It's just that I wanted to see this high get taken out first. So I wouldn't be using a slight candle closure. I need to see a you know, full body. Let me see. So this is a body here. There were some sell stops activated within this high right here, and then we traded higher. There's not another one along this leg here. It could be one, but I don't know. Yeah, I don't know, but if you look at these POIs here, this is the 5 minute. So if you're looking at these 5 minute closures and you're getting tapped in at these 5 minutes, look at that 1 5 minute candle that left was 20 points alone. From just tapping into the 5 minute candle and leaving 20 points alone. Look at this. From, let's say, this tapping into this up candle, or maybe even the wick. Since it's the 5 minute, tapping into it and leaving, delivering a 1-to-1 on the candle, you know, that's about 16 points there. But if you're trading back to, you know, 10 o'clock, it is a distance away from that. And depending on where you are, based on narrative, you could have this manipulated first and then go back there. So you just don't want to force those closures. Yeah, you don't want to force those closures. So there's 10 o'clock, right? What were you risking on something like that if you were break even up there? This is eight points up there. You have break even. You have nothing to lose on that. And heading back towards 10, you're, you know, essentially just managing price making its way back there. Because when it heads down here this way, you're going to move back up there too. You see down here? Strong drop below on that 5 minute closure up there, right? I would have missed it if I was waiting on that draw. That's fine. That's okay. So we have this is a large down candle. I'm hoping we could have another move down and then up, but as I mentioned, we would be looking for price to get back into here. Right? We'd be looking for price to get back into here if we traded down below here. So this is an MM that it's tapping on. That's why I was expecting that. Remember what I said with the higher time frame MMs. If you want to time a reversal properly intraday, use a higher time frame MM to do it. And let me play the rest of it through to get to the next 10 o'clock one. So no close within this closure over here, right? No close, so you would have had no trade, you know, leading into that late session. All right, there we go. So here we have 10 o'clock, 9:30. So this is the 9:30 low that it put in. This is the 9:30 low. Remember what I said about 9 o'clock? The job of 9 o'clock is to put a wick in the 6 o'clock 4-hour candle, right? So it's a 6 o'clock 4-hour candle there. That's the body on it. And the job of 9 o'clock to 10 o'clock is to leave a wick behind there, right? So in the event that we trade back into here, we're in a wick, but we could run the wick slow and then trade back into the high of the wick like that, right? So don't worry, we're going to be able to go through that 10 o'clock model in real time. We're starting early now for you guys to see the validity of it and why you should wait. So I see we pushed up above this high here. We have this fractal below right here. If this zone holds, I'd love to take a long off of here somewhere and move into whatever is back here. This could just be an MM right back here. I mean, not could be, it is one. So this up move that came from that Thursday, this is the MM right here. All right. So we'll see. This is not necessarily my stop loss. This is the invalidation of my idea. So when we get there, like on the 5 seconds, something like that, there's something in there that could sort of give me the idea when it got there that price could be looking to move to the other side. Up, look at that. Yeet. Idea gone. The idea behind this POI is gone, right? The idea behind this POI, but not the idea of trading back to this right here. It's just where I was starting. So if you see, we actually hit the 50% of this zone, right? So if we hit the 50% of that zone, a lot of the times that wick is a nice pop off of it when price comes back to test the wick and potentially trade higher to that high right there. But the other thing that I'm watching is we have this swing in here, we have this swing inside of here. If this puts in another swing here, that would be that third swing. So that can be gearing up to give us another swing that would in turn bring us back to here. Large candle in there, I would have to see how that looked on the 1 minute to proceed with that. But the idea would have been just behind the wick. Yep, yeet. Ran through that low. And the same thing here. The same thing is behind this wick. The same idea. Behind this wick with the same... I'm looking for that move inside of there on that 5 second. Remember, this is the 5 minutes, so it takes some time for that to even happen. But I'm finding a little scalp within here to move right back up. And I'm thinking that we're looking for there. The only thing that changes my mind about us looking for there is if we close below here. Right there, right? Because we're still near that protected low. We're at the 70%, right? There's cheap dad that's in there. Hit the 70% right there and trade it back to the 30. That idea there to move higher could still be in play. Look at how these large candles keep dropping inside of... Yo. So if this doesn't move off of it, I'm done with the idea, and I would wait until 11. Yep, waiting until 11. So all of these wicks, there was no flip. What a flip is if this candle taps in, this red candle taps into this green wick, this red candle would have to tap in, and the next candle would have to run up above to this open right here to be considered a flip. And then it trades back to the wick, right? and then it moves higher off of the wick. So we didn't have that in any of these wick circumstances. Getting back to that open up here or that open down here. So 10 o'clock is still here, right? This is too close to be buy stopping and sell stopping down or up candles around 10. So I wouldn't suggest that. I would consider if we close below here, because that's closing below the hourly low. So I guess this is just a day that sort of stayed near 10 o'clock the entire day. Looks like we're getting some move away from it. Remember what I said. Now here's where you could, look for that move heading back towards 10 o'clock with that down candle closure. You want to make sure you're away from 10 o'clock. You're not near it. This is not like, oh, we're right here and we go back to 10 o'clock there. It's not like that. You want to be away from it and then trade back towards it. Or you want to be away from it and trade back towards it. It's not that you're trading to 10 o'clock to TP at 10 o'clock either. But it just gives you your start of where the market is getting ready to move back towards. And it's often the 10 o'clock hour. So no closures, you would just keep watching this. There's a 5-minute closure here after taking out the high of this MM here. So this can just be that first tap. That closure would have been fine to take here with the invalidation of the idea behind this, because we already had toilet paper people on this run like that, right? So it would have been validated there. But you know that since this is the run of an MM, the possibility of another pop up and then that way. So this is helping you guys to understand, if you're trading options, you're fine. But if you're trading with tight stop losses, you need to know when is the beginning of the actual move you're looking for and when you're scalping towards, that move potentially beginning. So you see that? So the close right there was fine with the invalidation behind this high. Going back towards 10 a.m., right? But it doesn't necessarily have to deliver to 10 a.m. It's just that if you notice, what's the stop loss on this candle? The stop loss on this candle is 8 points. What was the stop loss on the previous 10 a.m. candle that we used? The same stop loss was 8 points. So it's understanding that if you can just wait that out and then trade back to that, you could find a quick scalp that could give you a meaningful, amount of RR, a meaningful run away from price, right? That's 4R that it ran. Meaningful run away from price for you to be able to just take that one trade or take 2 trades instead of taking 5 and splitting them up 10 points each. Because this whole thing could have ended up just quickly and sharply delivering straight to that 10 a.m. low. You could be in an entry that it does that. Go and backtest the 10 a.m. closures. You'll see that. So it ran that way. Let's move to another 10 a.m. You look at that. You see how it ran all the way? Let's go to another 10 a.m. closure and then we're done. I know I said that before, but I just want to show you guys the validity of it. I can feel my voice box cutting out. So let me just get this to you guys and then. So the first thing you want to do is your 6 a.m. closure because you know where your last 2 o'clock high is here. That's your last 4-hour high. That's your last 4-hour low there. You're looking for 9:30 and 10 o'clock. And then you want to look at where 2 o'clock is with respect to market close. Okay, so here we are. We know this is a sweep of a higher time frame low below here, right? We know there's an MM down below right here, right? Just at that low. We know that even so, this low down here, that extension up that ran that way, that extension up like that, we know that this is an imbalance inside of there. So should this end up running down there, it's running into an imbalance to potentially move back up above, right? So this is just framing the idea, but this is around these 4-hour POIs. So let's speed it up to 9. All right, so here's 9 o'clock, right? You know, 9 o'clock's job is to what? Put in a wick. So could 9:30 run that way and then move back that way to put in that 4-hour wick? I don't know. We'll see. Now you see how y'all be getting caught in those little fake outs that way and it runs the other way? So there's that 10 o'clock right there. There's the low of 9 o'clock, right? So we know that the close and low here, this is the wick at 9 o'clock. So this is the previous 4-hour wick as well as the previous 4-hour low. This here, it's a bit risky to take a trade off of that there. But being that we closed up above our 9:30 here, I'd say that if we could move up above here, I would look for a move here to trade higher into there. Could be looking for that there. But if we sweep there, right, and we trade down below there, I would be looking for a move that trades back to this here. So I already have both of my moves set out, right? I have that one, I have the break up above here, and I have a potential short there. 3 moves already, right? Trust me, this is the backtesting session that would have all the gems that people don't watch because it's long. So there's that break and close. That break and close would lead me to look for a long somewhere around here. And maybe even down below there. So that long would occur somewhere over here, as I mentioned in this drawing, to then move me back in that direction. And remember, if price trades away from this, then all we do is find a candle closure trading back to it. And these wicks are not meaningless. I mean, these wicks, they have some nice little point values coming out of it right here. That's about 21 points coming out of that wick itself, you know? So it's not, this is still some pretty large point value in terms of these POIs, but you want to look for those closures. There's a low right there, right? There's a closure with a wick down below there. Alright. So you're looking for price to get into here, maybe below this flat candle low, and then move back up into here to potentially reject. And if we stall here, then we go down and take the low. If not, then we move that way. So if you see, we traded back up above. We had that closure. It traded back into here, but never materialized anything for us. Didn't give us a confirmation when trading back in to close again below, nothing. So the next one is what we'll be looking for. And I get it, backtesting is boring. Here's the next closer. Backtesting is boring, but this is how you find things that you can legit depend on. So here's 11:45. Remember what we said? We said that usually around 10:50 to 11 o'clock we get that. But here's 11:45. It runs away, and then now it's looking to trade back. It could be looking for these lows here. Those lows right there to head right back to 10 o'clock to tap into something here. And you can find even a long here to move back up there, as well as the short there to, you know, potentially target something lower. But that would have been a nice little with that body close. We'll see if it goes back into this zone up above, if it taps back into the zone here and then moves lower. If it doesn't, it doesn't. But if it does, we get a move to that low. Looks like it went a little lower before that. You see that? You see how that candle... Now look, even if we traded here, right? Even if we traded here and traded away like that, right? What does that point value consist of if it's the tap with you stop behind here and you're taking the low? That's a 1 to 1.32 this here, which is 23 points off of the tap of that, right? But if your stop was behind the fractal that's there, right, and you were willing to just risk what was in the fractal, 3 points in the fractal, look at what kind of R that ends up being, just based on you refining and knowing where you're sort of getting into that entry. So that's that 10 a.m. that drops back into there, right? Remember, if it moves back up that way, the same thing. Candle closure back down into there. Looking back for that 10 a.m. There was a candle closure there that provided a short-lived short, but it traded back up above. But there was another candle closure here, right? Another candle closure there. It closes, price comes back to tap the low of it, and then what does it do? Gives you a 2R trade, total of 25 points, only risk at 12, but looking for the low here. And this just gives you a start. It's not saying that you're going to get 40 points every day. It's not saying that you're going to get 25 points every trade, but it's giving you a start on, in terms of direction, what you're targeting, what you're waiting on, what you're looking for to apply. And then all you're doing is just trading to whatever's going on within that narrative. And if it trades back up, it's fine. But we know that 10 a.m. model is usually looking to trade back into that direction of 10 a.m. So you see how it goes to the wick, right? We plot the wick out, but you see how it also takes the internal low right there as well. And you see the point value on that? The first one was 8 points. The second one was 8 points. This third one is 12 points. For that same kind of large drop leading back to what? 10 o'clock. And wait until I teach you guys about the only fractal you should ever use. Because there's only one. And it shows up one time a day. I'm sorry, one time per session. There's only one fractal that you should use. And it shows up one time per session. And that's one of the highest RR fractals you can get. Those things will be introduced later, but you guys got to get a sense of direction now. So now that you know that 10 a.m. or after 10 a.m., oftentimes wherever it goes, it's looking to head back to 10 a.m. Now you have something directional as to when you get that 5-minute closure above or below 10 a.m. price. Now it's not above or below, it's away from 10 a.m. price. You get that close away from 10 a.m. price above. You get that close away from 10 a.m. price below. That's what it actually is. The close away from that candle. So you don't want to be near the candle when you get that close. And you essentially find banging trades like this. So again, I know this session was boring and dry, but it's mechanical. That's what mechanical trading is, right? It's boring and dry. Not until you actually start to see the real live time results with that. That's when you start to say, okay, yeah, this is different. So I'm gonna shut the recording down here, and I'll see you guys tomorrow, all right?